Hi, Bill Bodner, Mortgage Market Guide. Thanks for tuning in to our MMG weekly recap. So here we are on a Friday, and what an incredible market week! Tons of turbulence, and it started with on Monday with the vaccine, the announcement Pfizer has a vaccine that's 90% effective, and what we experienced on Monday through today is typical, where markets tend to overshoot. If you recall, back on Monday, the Dow Jones nearly hit 30,000. And here we are on Friday, we're 800 points or so off those best levels, even after gaining, a bunch throughout the week. So it's been a very volatile week. At the same time, the 10-year note back on Monday hit 98, and here we are at 89. So a couple of things from a technical standpoint, the 10-year note remains beneath resistance at 96 basis points, which is a good sign. If we take a look at mortgage-backed securities, we found a little bit of support here. If I take a look at the 2% coupon, which is a little more of what's going on in the current coupon, you can see this, you can see a nice horizontal line across here, and we're bouncing off support, which is helpful as we head into the weekend. So there's a lot that we have to track. Next week, there's a bunch of economic news. Retail sales is a big one. Housing starts, we're expecting, still solid numbers. Existing homes, housing is the bellwether of our economy. But the other things that we're watching, number one, obviously, is this vaccine. Now, the vaccine, while markets tend to overshoot, and we watch stocks, go high, rates go high and come back down, we can't discount the trend. And now it really is a game changer. It will take time before we have it mass distributed. But the other thing is we're going to have other vaccines too. There's several other firms that are right at the goal line of bringing a vaccine. So the vaccine is going to be a headwind for much improvement in bonds. And that's something that you should be sharing with clients and partners. But the other thing that we're watching is this rise in COVID cases. The cases are jumping significantly, and it's a problem because now we're hearing some, here in New Jersey, we're seeing schools already closed in many areas, or not closed, but now in a virtual environment. New restrictions are in place, so that's going to have an economic effect. All right, so that's happening. But at the same time, what I'd be sharing with clients is more stimulus is coming. There's political fighting. It seems like there's an ocean between where Republicans, Democrats want a plan to be, but something will have to happen. And then on top of that, the Fed will be here to do more. So it is all of this that we're balancing. But right now, we're watching yields move higher, and the vaccine should be a headwind because we know that cases are rising, and we're going to have this moment in time, especially over the next couple of weeks. It'll be very interesting to see what happens. But we do know that this vaccine is going to help. So it looks like the market, at least stocks, are still kind of pricing in a future, and bonds are also elevated, pricing in a future, not where we are today with the rising cases, but where are we going to be 3-6 months from now? And I'd like to think that we'd have widespread distribution of a vaccine and be in a different spot. It doesn't feel so great right now where we're seeing record amount of cases, record amount of hospitalizations, but the markets are forward looking. So I hope this finds you well. Have yourself a great weekend. Be safe. We'll talk to you soon. Bye for now.